Gold is sending the market a huge signal right now, and in this video, I'm going to discuss what that signal is and talk about some powerful things that this could mean for the market coming up. So check this out. On the price action here, we saw a gap open on Sunday, followed by a pullback here, and that pullback was actually a gap close. What I mean by that is we had the gap here, and we filled that gap just before price exploded back higher here, following through this morning. On the daily chart, gold pulled back to a key level of support on Friday and quickly tested underneath. You could call this a bit of a liquidity grab, whatever you want to call it, a stop hunt, a false breakout, name it whatever you would like. But we saw the snapback here on Sunday's open, again, filling the gap and going higher from there. I would say that the price action for gold looks pretty bullish at this time, and it's sending a huge signal to the markets right now. This morning, we had a couple key indicators from the PMI numbers that tell us something about the economy and that gold reacted pretty sharply to. ISM manufacturing came in lower than forecasts at 50.3 compared to the forecasted 50.6. At the same time, ISM manufacturing prices came in a little hot. This is, of course, an inflation risk, and with that going higher alongside manufacturing PMI's missing forecasts, that brings back into the conversation a little bit of a signal that gold is forming, that is stagflation. And if we take a look at the economic heat map, this is what I wanted to get into. What you'll see here is that we have inflation still quite sticky. CPI is at 3%, the producer price index or PPI is up 3.5% year over year, and then you have PCE, which is at 2.6, which is not great and not terrible either. So it's fair to say inflation is still sticky for the United States. Meanwhile, we have GDP growth, which is not quite as high as it was previously at 3.1%, now at 2.3. And this 2.3 meets the forecasted 2.3% forecast that we had recently. So this new heat map on the edgefinder, I think, helps to better illustrate what we're trying to get at here, which is basically we have sticky inflation. However, the US economy is not as upbeat as it previously was. So what we're seeing is a little bit of cooling in the US economy. We don't see a whole bunch of red in GDP growth or wage growth or things like that. We still see some gray text, slight blue text as well. So the US economy is not in a bad spot, but inflation is still sticky. And if these numbers continue to cool off, then we may enter into a more stagflation type of environment, which is where you see inflation hot and growth really cooling. Another thing that's worth mentioning and why I continue to be a little cautious on this market is that the institutional money report here from the latest commitment of traders data buy and sells shows institutional money aggressively bought the Japanese yen here in the latest filing. You can see a huge increase in long contracts and a sharp decrease in short contracts. That's quite a bullish take for the Japanese yen. For traders who watch gold and silver specifically, you'll also notice that there was kind of a slight bullish shift here on the overall net percentage change. You can see that they actually decreased longs and decreased shorts, and you may be asking, well, then how does that equate to a net bullish shift in the price of, or in the positioning? Well, it's because they have a lot less shorts already. Institutional money is overall very bullish on gold here. We can see that actually in the net positioning up here. You can see gold is still the number one, with silver being number two, institutionally positioned asset on the commitment of traders data that we track on the COT data tab. And COT data plus price action that seems very bullish with a sharp reversal on Friday into Monday's trading action keeps me very bullish on gold. So I actually initiated a gold buy position with a stop loss below these lows. If we take out these lows, I would actually be fine with it as it's a relatively small position for me, and I would actually be happier to try again if we get a move lower down to 2780, at which point I could probably get a little bit more size on my position, especially with that previous all-time high. I really like that idea. If it does crash through those lows, sure, I'll take a stop loss on this trade, but I would actually be looking for a better entry even at this level. So I'm bullish here, but even more bullish if we get a sharper decline in the price of gold. By the way, if you're wondering how you too can track institutional money flow, as well as what the crowd is doing and our new economic heat map page, all of this is available within the Edgefinder, which is my company's primary market software tool. It allows you to track economic data as well as sentiment data and market trends that are happening right now in the form of our top setups algorithm. You can see I am long gold. Part of the reason for that is that the Edgefinder produced a gold bullish bias reading with a score of +8. That means that the sentiment technical and economic data, generally there is a confluence of bullishness for those signals for each of the respective categories. You can see the commitment of traders data, for example, netting a +2 score for gold, retail positioning being very bearish gives me a bullish reading, and then seasonally, right, there is a good historical seasonality to the month of March for the price of gold. Here's that seasonality month-to-month chart that I just mentioned. You can see here is March 0.75% average returns for gold in this month. It's part of the reason that I have a bullish position and why the edgefinder has automatically calculated seasonality as a bullish contributor to the overall bias. So if you're interested in taking advantage of a huge discount that we're offering on the edgefinder, here's some information. For a very limited time, people who are watching this video can take advantage of a 30% off discount using the promo code and link in the description down below. If you have any questions or you would like an extra subscriber discount, you can use the first link in the description down below to speak directly to our support team. You won't be speaking to a robot, you'll be talking to a real person on my team. The reason we do this is it gives you an opportunity to speak to someone on our support team who can answer some questions about the tool, see if it's right for you, and if so, they'll help you get set up with a copy for an additional extra 5% off discount. So you can get up to 35% off this week only by speaking directly to our support team using the first link in the description below. I'll also leave it as a pinned comment as well. Traders who are watching gold may also be watching silver as well. You can see there was a sharp bounce back here over the Friday and Monday trading action here. You can see a big jump in the price of silver, but I don't love the price action here as much as I do for gold. We saw gold hit a support level and immediately see some reaction. Silver kind of hit support, failed at that level, is now kind of winding back up, but I'd be looking for some sort of higher low, some sort of signal that bulls are back in control before I jump to any conclusions on the silver market. That being said, silver is a bullish reading on the edgefinder as well, so I'm definitely going to keep an eye on it. I've just selected for bearish and very bearish readings in the edgefinder just to see what it produces for us. And you can see we have bearish readings on Australian dollar against the Canadian dollar, euro yen, euro pound, CAD yen, Kiwi yen, dollar yen, Aussie yen, and Swiss yen. It's safe to say that overall the edgefinder is definitely bullish on the yen still. And with the bounce that we saw in the yen crosses here recently, we could talk about this. You can see we had a sharp move higher in dollar yen, CAD yen, pound yen. That impressively, in my opinion, was held by sellers. You can see at least at the time of recording this, we had a jump up in the Swiss yen here today, but you can actually see sellers have come in. I think that that does have a good chance of continuing, and I do see, for me personally, more lower prices for yen crosses at this time. I think that this Swiss yen trade has the potential to break those lows and to continue in the downward direction. And I'm not basing that just because the technical chart is moving lower. I'm basing it off the idea that we have overall a high level of conviction from the edgefinder, and typically when we see that, if I can find the right entries, I've had a lot of success with those types of trades. So I remain bearish, specifically very bearish on Swiss yen, as I've already got an entry and I'm looking for it to take out those lows, at which point I'd be looking to potentially take some profits if I can find the right exit point. I'm also long TLT and have been for some time here. This also benefits from a lot of the same things that gold would benefit from, specifically uncertainty about geopolitical risk or falling interest rate yields like we've seen in the 10-year. We actually saw a pretty sharp reversal on the 10-year yields and 20-year yields as well. You can see this morning we had kind of a move higher followed by some fading of that move. So that is good for TLT and also good for metals. Take a look at the dollar index on a 15-minute chart and you can see some regimented selling here. This is also good for metals and for TLT as well. Dollar index on a daily chart actually tapped into some resistance and seems to be finding sell pressure. I'd be very curious to see if we can get back down to these lows, if we're able to take out those lows and head down to a key area like 104.5. And today's video is sponsored by DNA Funded. If you haven't heard of them before, you can check them out down below in the description if you'd like to do some due diligence, see if they're right for your type of trading, but they actually offer a pretty significant discount right now for a limited time to my subscribers with code A1T20. With DNA Funded, they offer up to 90% profit sharing. You can trade pretty much everything on their platform with 800 plus different assets, and they offer unlimited trading days on both 1 and 2 phase challenges. So check out DNA Funded using the link in the description below. And don't forget to use that promo code as it gets you a discount and it supports our work here on this channel.
Yes. One of the most bearish readings I've seen since a actual bear market. Crazy amounts of sentiment swings we've seen this year.
I'm glad you brought that up because I wanted to discuss that. I also broke it out into 2 other unique charts. I think it can sometimes be a little hard to look at all at once. So I broke it into 2 segments. This is your bullishness. This is your bearishness. As you pointed out, look at the bearish sentiment. So for those who don't know, the AAII Investor Sentiment Survey is a weekly report that shows a huge number of respondents' perspective on the markets. Are they feeling bullish? Are they feeling bearish? Are they feeling neutral? Last week, Ivan was just on. We were discussing this big sell-off that we saw. And now, as you mentioned, Chris, we have 60.6% of respondents saying bearish. I mean, my perspective on that, Chris, is look, I'm a little cautious on the market myself, but we have to remember this came out. When did that come out? Thursday.
Yep. Worst
Perfect.
day, like Wednesday, Thursday was a terrible plunge. 6 days red. It's like I understand why the sentiment was deteriorating.
Yeah. So
But
that's my thought is, so guys, this 60.6%, this huge bearish spike in sentiment, when did that occur on the chart? Well, it occurred right here on this big sell-off day. Sure enough, market completely reversed on Friday and has followed through a little bit here today. But here's you asked me my take on it, Chris. My take on it is, look, if everybody's getting one side of the boat, I want to be cautious all the time. But I also think there's a possibility that we worked off a little bit of that oversold kind of nervousness. And I still remain kind of cautious myself. In fact, I kind of lean bearish in the short run for indices with just everything that's going on. I think longer term, it's a buy the dip opportunity. If we get a sell off down to 5,700, look, I'm going to be accumulating shares on stuff that I like. But what are your thoughts? Different? Same?
No, so I put in a couple of trades that are, well, here's a good example. I just ran an 11-year study, and I just soaked in a bunch of stuff this weekend where it's kind of like rehashing some of the strategies that I typically trade. All I did was I made a couple tweaks to the volatility index, and I ran a study where basically anytime the VIX is over 20, can I sell premium? And should I sell premium, and how do I sell premium? So it's a delta neutral or a kind of directionally neutral strategy, but with the VIX spiking where it has been up to 20 plus, it usually bodes pretty well for this particular strategy. So I started out this morning selling some premium, where right now out 45 days, it's pretty much like a textbook trade for me. If I go out 45 days, if we're somewhere in between this range, which is about a 7 to 8% swing, I still make money on the trade. So I thought about it this way. When we came into basically 6 days of selling last week, and we had that big rip up on Friday, I thought this was protecting the lows for right now. I mean, everyone is calling this the Trump put over the weekend, which I don't necessarily agree with. I think that Trump is going to be more vocal about the markets if they start to fall. I mean, case in point would be if we did make some fresh lows, President Trump will be vocal. I said this for the last month or so. I see this market this year as you've got, let's say the market's just driving along. I feel like Chris Farley and Tommy Boy when he's on that guy's desk and he's just like, bah, 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 bah. But the market's just riding along, and you have a guardrail and a guardrail. So the market's swerving around and doing its thing, but you've got equities on one side, bonds on the other side. As long as nothing breaks, this market's just going to keep humming along. We're going to still have tariff threats. We're going to have these bargaining chips. You're going to see random tweets and just noise, right? It's a lot of noise. The market, I don't think, could all of a sudden flip and say, like, we're excited, we're going to all-time highs, because nothing really changed. All we did was have terrible bearish sentiment. That's a contrarian signal, but it doesn't mean that everybody has to jump in and load back up and be buying, because if we do that, we'll go right back up and hitting all-time highs, and it's going to be too bullish, and the market's going to flip again. So, but again, I mean, this could all change with, like, tariffs could be kicked down the road. This 10% tariff in China could be like, it's 10%. Who cares? 25% could be delayed in Europe or delayed in Mexico and Canada. Who knows? Everything's supposed to be going into effect right now, but it pretty much put a floor in the way I see. We filled the election gap on the S&P. We're using this pretty strong support level. It was also right down to the same low on Friday. I wasn't surprised to see that move like intraday. It was a crazy end of the month. And usually February kind of like shrugs off all of the flows. Like big leaps are expiring in December and January. There's a lot of option expirations in that December to January cycle. And so February is usually like, okay, what do we reassess? And so Mag 7 has been a big reason the market's been down. Nvidia crushed earnings, but it wasn't enough, right? Because it's like slowing the trend, and its crushitude, it's slowing the trend, right? It's not exponentially. It's like the law of big numbers. Is it easier to make $1 billion to $2 billion or $100 billion to $200 billion?
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.